We can hear you, Parveen. You may not be knowing where this. Sorry for the interruption. Let me continue the deck. There's a safe harbor statement which has been there in any of this presentation which we make on quarterly results, which speaks about it that this is not all the statements which is made in this release concerning our future prospect or forward-looking statements. Forward-looking statements by their nature involve number of risk and uncertainty that could cause actual results to differ materially from the market expectations. There's a full statement which is there as part of the deck, which Parveen normally read out to all of you. This time we will not go to the presentation deck. We want to look at it since our business is monitored on a last 12-month basis. It's annualized business. So our data which shows for this quarter, we have last 12 months revenue are 2,126 crore revenues, which is a 21% growth on 1,751 crore. Our platform revenue has grown at 43% from 464 crore to 324 crore. Our license revenue has a dip. There's a slowdown of license revenue decision making in Europe, which was the earlier point which made after the Ukraine war that there's a decision slowdown. It is minus 18%, slowed down to 360 crore to 297 crore. Our AMC has healthily rose by 14% from 316 crore to 361 crore in last 12 months. Obviously, our PAT has come down substantially from 334 crore of last 12 months to new number is 272 crore because of the increased investment which I mentioned for moving the business from product to platform. I'll take you over there. Our EBITDA margin is minus 4% from 437 crore to 419 crore. While the gross margin is up from 1,000 crore to 1,161 crore. Gross margin percentage has come down from 57% to 55%. EBITDA has come down from 25% to 20%. And license link revenue has grown by 12% from 1,000 crore to 1,121. So these are top line metrics number. In this, what for the improvement side is healthily growing at 21%. EBITDA is having a constraint of the higher cost investment, which is planned investment. And third thing is that receivable days has moved from to 139 days. So that is a other point which need to be explained in this result. What is the basis of this three different elements? Our quarterly numbers are 555 crore. Our quarterly number is 105 crore EBITDA. So these are two major numbers and 139 days of the DSO. So first number is moving EBITDA from 25% to 20%. This 5% reinvestment back from moving the business from product to platform. During my April presentation, we mentioned about moving the business from 25% to 20%. That 5% will be reinvesting back or looking at a very positive number what we are seeing in a platform-based business. So that's a one important piece which we try to intact. This last quarter number was much lower. This quarter we are close to 19% EBITDA in this quarter for 105 crore. And we are looking next quarter will be better than this number. And second point I want to make, our investment in people is always in, is not a linear, it is always happen on a, what I'm saying, step basis. So step base are $45 million, $60 million quarterly run rate and 60 to 75 million run rate. Now we are close to, on constant currency, our revenue are $72 million. And so we are close to $75 million, which we were looking at it to be doing it. So this number of $60 to $75 million, we looked at it in last October, released in 5 quarters. We reached from close to $75 million, and we are expecting Q4 we will be able to cross $75 million on constant currency basis. On the DSO days, we have something called contractually not due revenue. When we sell a 5-year deal with a customer, a long-term deal with a customer, the money get due after certain milestone, and those milestones are makes our contractually not due number, including GEM, because GEM also they pay us X percentage upfront and Y percentage after the product gets delivered within the when the payment is marked on the system. I shared with you that number of contractually not due out of the total net receivable of 648 crore. That number which is contractually not due is over 250 crore. So that's a which will distort my figure of DSO of 139 days. If you take it away that number, it's close to 108 days of DSO. And when we look at geographically, this number, it is in America, the DSOs are just 16 days. In Europe, our DSOs are 28 days. APEC is 189 days. EMEA is 177 days, and India is 131 days. If you remove the contractually not due number from the old DSO reporting. So now let me come to the product versus platform strategy. The platform revenue are growing healthily to 464 crore last LTM, which is almost we started from 50 crore to 464 crore in last 3 years. We are able to move that platform revenue, which is giving a sustainability to the business. And platforms of now let me give a flavor of each business. In GTB, we mentioned about two main product lines: liquidity product line and DTB product line. Both are leading quadrant products. Here we are winning 3 out of 4 deals in the marketplace. Both these products are performing very well. There was a delay in decision cycle time last quarter. Last 2 quarters or last 3 quarters, there's a decision slowdown cycle. We lost some of the revenue, like Spur Bank, we lost during on the date of signing the contract. Would have been $20 million contract. When the team has went for the signing it off on 24th of February, unfortunately, the war happened on the same day. So those happens, but that doesn't change the business scenario of the compelling business position which is happening. So in this area, the GTB, if I look at liquidity, we are now getting a good traction since interest rates, global interest rates are higher. There is a good traction. France, we are announcing the second deal in the France after Stockholm deal last year. Now we are announcing second largest bank in France is also selected liquidity, and then we have another 3 to 4 deals in liquidity in France. Liquidity is now moving to Canada, and then it can look at Spain, Italy, and other countries. We are looking very focused way, country by country, to take a major market share. If top 2 or 3 banks take our liquidity and DTB, then we are leadership quadrant is established. The way we did it in DTB, same way we are doing it over here. In GCB business, the 2 platform, one core banking platform, which is we call IDC. In last 6 months, our microservices based, API based, cloud native, event driven, headless platform has been very well accepted in the marketplace. We are able to differentiate ourselves in Europe and America or Canadian market where this headless is a great proposition. We are working in at least 7 deals over there in Europe market on MAC compliant or MAC bond. I would not say compliant, MAC bond core banking system. One good news to the investor is now we are in top three, one of the top three players in core banking now. When we are looking at survey and one RFP we are participating, we are part of Thought Machine. Thought Machine is a new competitor emerging in a new technology space, and Temino is a 900-pound gorilla sitting in Europe with a large customer size of it increment. So these are the two more competition in core banking. But core banking market space perspective, getting qualified in top three is a very, very big success from our viewpoint, and we are seeing that we are able to compete head-on with Thought Machine, and some of the deals, Temenos is coming third, is a very soothing proposition. Those deals may not have closed in last 6 months. Deal closing in core banking takes 12 to 24 months. So cycle time for changing the core banking when we are engaging the customer can go as high as 24 months. We implemented this solution for one of the German clients, which we announced a deal 2 years back. Second largest retailer of Germany. That system is working smoothly. In November, they are processing 300,000 loans on a single day using our microservices architecture. I think that's the kind of power we are able to get a referenceable client in European market, which is giving us a acceleration on this business. Second business of GCB under GCB is iCredit 360, which is designing credit product. It's a comprehensive 360 product where all the credit portfolio of the bank, from retail loans to SME loan, can be SME loan to credit card. Whether secured or unsecured loan can be processed on this particular platform. This platform deal we announced 3 quarters back from one of the Swedish largest financial institution has selected us for their platform research, and that platform has a very good traction because using the iCredit 360, one can design their own solution. So that's a second, these two platforms. Third platform they have, GCB has got Quantum. Quantum, we had a good deal till June. Last 2 quarters, we have a slowdown. We are having a pipeline of more than 7 to 8 deals which are there in central banking. The best part is we are fighting this battle in an advanced market now. So central banking deals have moved from not only in the Africa market, it moved to the advanced markets. So, which is very, very heartening to know. Then we look at Intellect AI. We consolidated our business into 3 units from 5 units. So we had a RTM unit and a wealth unit. So RTM unit has been merged with GCB business. So treasury business has been merged with the GCB business, and wealth business has been merged with Intellect AI. We renamed Intellect Seek to Intellect AI. So there are 3 units now where GTB, GCB, and Intellect AI, all the 3 units has been merged with. And the thinking process behind all of it is Intellect Design Arena. When we set up, Arena was the piece when we said that there will be an incubation stage company, and there will be an ecosystem building company, and there will be a scale company. So when a product is getting created and first 5 customers are there, it is in the incubation stage. We give quite a lot of freedom to the team. It's around 150. They work like a startup company in that particular space. Once it reaches the first 5 customers, we believe that it's a time when we can use organizational resources at a scale level and global reach of the company. And that is the time when we merge with a larger unit. So that's a strategy which we announced sometime in 2016, 2017. That's how it is done. Now, the major business is in these 3 units. There are minor products in the retail space and some other space which are running, which are non-significant, so we will not be talking about those products in any of this conversation. The Intellect AI space, Magic Submission, which we launched in US, which Banesh has highlighted to you. From 3 things it does. It does the extraction, it does the enrichment, it does transformation, it does validation. The entire piece which is there on underwriting policy, now has matured to the level where it's moving in a design thinking vocabulary. There are three circles are there. First circle is called lean startup. Second circle is called ecosystem, and third circle is called scale. So this business of magic summation is moving from lean startup, where we are creating a 10 clients to be working on the platform, now to the ecosystem space. The three elements for differentiating between startup, lean startup and ecosystem is, in lean startup, it is desirability, feasibility and viability. Once viability gets established, then it moves into feasibility, value enhanceability and adaptability. So it moved to the value enhanceability and adaptability in this space, which is disrupting the BPO space significantly. There is a very, very heavy pipeline, and here we will be hiring and investing more money in this business. Second business, wealth. We took some time under the leadership of Jaideep Pilla. Some of you know him. After he did a lean startup, he handed over the baton to Banesh and Sudhir to run this business. And this business now have a great traction. The largest Indian bank, SBI, is a customer of this, which may be going live recently. And other two large wealth managers have also chosen. One of them is in this quarter. We are announcing the deal with the largest bank in this quarter. And there's a pipeline of almost 80% of the banks are considering to replace Miles with our Intellect Wealth Cube. So that's a second line of business, and very, very exciting journey because we are focused on RM Office as a key strategy there. And third thing is the AI platform, and that's where the Intellect AI names come from. And in this platform, we have a two core technology which I mentioned to you during our technology day. Both the technologies are now getting combined to deliver ESG and delivering corporate governance. At the end of the presentation, maybe 10 minutes time, we'll just demonstrate how one of the outcome of this product, this AI platform, we launched Magic Invoice on this platform. We launched ESG platform on this platform. And third product on this same platform is Sherlock. So Sherlock demo, I will be giving you once we, after question answer session for last 10 minutes. Anybody who wants to stay back for asking questions, they can stay back. That is a preview, very, very small preview. We are working on it. It will take another 6 months to get to go to the market, but that's the work which we'll be doing it. Preview at the end of the presentation. So with this, I leave the platform for question and answer.
Hello.
Okay.
I'm audible?
Yeah, now you are audible.
Yeah. Yeah. Now we are opening the session for Q&A. I request to please click on the raise my hand so that your answer can be taken. The first question is from Mr. Pratap Maliwal from Montera Finance. Please unmute him. Ask your question.
Hi, am I audible, please?
Yeah.
I just had one question. That last quarter, I believe that we had a contract of around 3 million that the revenues had not flowed in. So have we started booking those revenues now in this quarter?
Yeah, that revenue has been booked into this quarter for getting the current numbers.
And those revenues are flowing into which part of our business? That platform revenue, license revenue, and perhaps if you could just maybe tell us the quantum of how much we booked out of the 3 million?
And that 3 million is booked in a license revenue. There are two deals through which it was there. The license deals.
Okay. Okay, sir. Thank you. Yeah.
Thank you, sir. The next question is there from Pradyumna Chaudhary from JM Financial. Pradyumna, please ask your question.
Hello, sir. Can you hear me?
Yeah.
Yeah.
Yeah. So I'm just trying to get a basic understanding here. Like traditionally, my understanding is that the BFSI focused product industry has been very slow growing. Like there have been phases when there's been a lot of investment and the growth has accelerated, whereas in other phases, because of the tendency of these banking customers to stick to their old softwares, the growth has been slow. So I just wanted to understand, currently, are we entering into a high growth stage, like because of the entire COVID, which has led to digital transformation? Are we entering into a higher growth stage, and is the demand coming back for the industry as a whole? I understand you guys have grown at a much healthier pace, but overall for the industry, is it coming back?
I would not say it's coming back for the industry. The product space will be slow growth only because decisions around changing the platform are very difficult decision in a bank. The cycle time of decisions are very long, and they are long because they are more than in some of the contract. Just to highlight to you, we have 21 signatory in a one single contract. Even contract requires 21 signatory for a one single contract that they're changing the platform. So it's a difficult business. Something that there are some tailwinds for us. One is we invested into cloud technology way ahead of time. So in 2017, 18, 19, when our stock was lowest, we were in investing phase of the product, and when we are moving to the cloud technology and microservices technology. We kept on highlighting that this is the investment phase of the company. But that's what we did, a bold call to say that we will build up this cloud technology. And because of we built this cloud technology, today we are in very healthy position where entire GDP business, GCB business, AI business is all can be consumed and composed to deliver a specific solution with a contextuality built in. So we promise the customer three things: composability to design their own solution, contextuality to make decisions, appropriate decisions for themselves and for their customer by using AI, and we help them extend their solution using our turmeric workbench. And that's helped us out in growing better than our. So our promise to the market was, or our design of the organization, not promise, internal design was 20% growth year on year is our design of the organization. And we always mention that it can be, last year we grew 25%. This year will be going slower, but 20% is our design strategy is designed around 20% year on year.
Okay, just a couple of follow-ups here. So one, so as such, COVID hasn't really been that big of an inflection for the industry, is what I understand from your commentary. And second, so other players that we have, like we have Temenos, the likes of even Oracle Financial Services, the FlexCube company, they are not really offering this cloud-based solution, is it?
They are having a lot of legacy sitting there. They are communicating in the market that they have a cloud-based technology. But when some architects sit down with them, we should not comment on our competitor, but it's more of a whitewash rather than a core cloud-born solution. There are two kinds of things: cloud-born solution, or you make some solution compatible to the cloud.
I think we saw the trend ahead and invested ahead, and they are in a catch-up game. That's why they're getting challenged. We are viewed along with Thought Machine as new age companies, so that's a difference.
Okay, understood. And second, on the competitive intensity, definitely from your commentary as well, it's clear we've been doing well. But overall, even if we look at, like, somewhere I had read that Oracle had won a customer where initially we were serving in Uganda, I believe. So, like, what is really happening in those terms? Like, are we witnessing significant competition in the industry as a whole? And are we gaining market share, especially in the consumer banking product? Are we gaining market share, or are we maintaining, or are we losing market share?
And we are having more deals over there in core banking now in Uganda, Zimbabwe, or all the African countries. But I think our focus is more towards Europe to fight the battle. I don't know whether you are tracking the company. If you are track the company, you should track Thought Machine. Thought Machine has invested $550 million investment in last 7 years in building the product. Our corresponding investment is less than $50 million in core banking. They invested $550 million at a valuation of $2.7 billion only on core banking. by the last investor which came in there. So that will help you in positioning the right understanding.
Okay, understood. That's really helpful. Thank you.
Thank you so much. Next, we have Mr. Moez Chandni from Syndrome Broking. Moez, please ask your question.
Yeah, hi. Thank you for the opportunity. Two questions from my side. Firstly, you've mentioned that you're seeing decision cycles recover in Europe and that Q4 looks visibly better. So could I just get a little more color on this? What exactly are we seeing in the European markets right now, in the short term, at least for Q4?
Adesh, should you like to answer?
Sure. So I think as you look at Europe, what we are seeing, we are seeing there is a play for, let's say, tier one banks and large regional bank players, where what Arun talked about, our IDC platform, which is MAC and based on composability and extensibility, is what is seeing traction. And we are competing in many deals in Europe as we speak, where we are competing three competitors. We are in last three, where we would have Thought Machine, Temenos, and us. So we are seeing us and our solution and the way we have architected resonate with most of the banks in Europe. So that's the good news. We also, as we have implemented and created references in Europe, we are seeing more and more opportunities in Europe, banks coming to us, customers are recognizing us, and the word of mouth and the references is building the brand image for us. So we're seeing more opportunities come to us. We are seeing that in these opportunities, we are in a head-to-head fight with one of these two other competitors that I talked about. So we are seeing a good traction from a Europe perspective, both in UK and in continental Europe.
Okay. Thank you for that. My second question was on the US. So I did notice that we've won a large deal with a US bank. So are we seeing more traction in the US? And could you maybe give us a little more color in the US market?
Yeah, so US market color, US and Canada is a common market we consider, so North America market. And with this solution which we mentioned about liquidity, virtual accounts platform on the banking side, Magic Submission is on insurance side, and our digital solutions on GCP side as well as on GTP side. There are 4 product lines we are putting in Canada. US, our entry strategy was Canada and then going to US. So now we are getting a good traction in US now. US is for next, from an incremental growth perspective within US is definitely will be growing at 20% plus next year. So that's the kind of a number we can put on the table, but it can be faster than 20% of a US market. So, and US market in insurance, Magic Submission, Danish, if you want to cover, highlight how the US market is playing with you.
So I think we are seeing a very strong traction on Magic Submission. I think we've already this year have over 8 clients. It's a very, very good, healthy pipeline of customers. I think Magic Submission in most of these, and 2 of these clients are tier 1 insurance companies. I think we're also seeing the replacement of 1 or 2 of our key competitors. And therefore, this sort of gives very good insight into how we will be disrupting the space around AI related to Magic Submission, where we are effectively eliminating the BPO companies and improving the speed of being able to process transaction very well. As a matter of fact, one of our clients came back and shared his number after our implementation of Magic Submission, where his revenue is almost tripled for that month. So I think there's a very positive capability of AI tools available to help customers take decisions around submissions of underwriting documents in a much more efficient way and much faster and accurately to help the underwriting make decisions quicker. So we're seeing excellent traction in the US and the side.
Sure. And if I can ask, what is the contribution of US to the total revenues for Intellect?
Yeah. Are we publishing that number? As of now, we are not publishing that number on the total number. And in coming months, coming years, it will be good.
Okay, and my last question was on margins. So, I mean, we've seen a sequential improvement in EBITDA. So, what is your outlook on margins moving forward? Do you see more scope for improvement in margins and any steps that you're taking for further improvement?
Yes. Next quarter will be better.
Okay, and any specific drivers for this?
Average top line revenue, our license has come down from 14 million last quarter to quarter. If you see, it was 14.8 million and this time 8.8 million. That is a 6 million shortfall. It's just a margin pressure. So for us, the one has to just look at it. What kind of a license deal we win, the deals we win to create the margin. Besides the operational efficiency, which we invest in, is stepwise investment. So now between Q2 and Q3, our operational cost above the EBITDA line is moved from 442 crore to 450 crore. Only 8 crore increase in the operational cost. While that cost was increased between 375 crore to 443 crore for the 3 quarters over there. So that 3 quarter was the phase of January to September, was a phase of substantial investments. So this cost will suffice us for $80 million run rate, around $320 million run rate. This cost will suffice. Then if you are shooting for another $100 million from $80 million, we may require another step up cost, and that cost will be there for 2 or 3 quarters when we take a decision. It will be there for 3 quarters. This cost increase will be there, then margin will come down. So you will observe the company will get into higher margin space, but we reinvest that investment money back to step up the business.
Okay, thank you. Thank you for that.
Thank you, Moez. Next, we have Mr. Mohit Jain from Anand Rathi Securities. Mohit, please ask your question.
Yeah, sir, 2 questions, one and both related to revenue growth only. So one is that, is there a slowdown or some sort of softness you guys are seeing on the SaaS growth for this year, meaning this quarter or 9 months? And the second related question is, when do we see revenue momentum building up again? When we look at it from a QoQ YoY perspective, last 9 months have not been so good, and we are way behind the 20% trajectory that we often spoke about over the last few years. So when do you think we can catch up to that? TCV wise also, it appears that our deal wins quarter on quarter are sort of stagnating, at least the large ones. So in that context, what should we expect from the top line?
Our projections are same, 20% on design. When we had last year 25%, we didn't change that. Anytime, Mohit, we don't change that. We celebrate the 25% growth. When license growth comes, we said still we are looking for 20%. So 20% when we plan the business, few quarters will be 15%, few quarters will be 25%. That variation is a part of the business plan itself. So we are going on that trajectory.
But sir, with license revenue slowing down, you still think 20% is something we should target?
We are saying that your LTM basis is still 21% growth, Mohit. LTM basis. We are saying always monitor us.
So you're referring to rupee growth, probably. We are looking at dollar growth.
Yeah, you need to pick up some point, which is to beat the company down. But if the 21% growth is 21% growth, you are investing. You are not investing in dollars here.
No, we are not.
Okay.
So we are targeting 20% rupee growth, is the point.
That's right.
Perfect, sir. Thank you very much and all the best.
Thank you.
Sir, sorry. Sorry, I missed one part on the SaaS growth. Is there any slowdown in SaaS revenue growth?
In this quarter, last quarter, GM has, we are coming to higher slabs or pricing comes down over there. So the GM growth which is normally should have been much higher, has come down there. With the price band.
And outside GM?
Cross like 1 lakh crore, no? So after crossing 1 lakh crore, our discounting is much higher.
Okay. And outside GEM, you do not see any slowdown in SaaS, right? We should see that pick up.
No, only in Gem we
Perfect.
have.
Perfect, sir. Thank you very much. That's all.
Thanks, Mohit. Next, we have Ms. Sugandhi Sood from Incred. Sugandhi, you're there?
Yes, hi. Thank you for taking my question. I just wanted to verify, as you mentioned in your initial remarks, that you are looking at a $75 million run rate. If I got that number correct, in the coming quarter, and also just looking at your the disclosures that you make on funnel. And I wanted to get a sense in terms of deal wins. Is there any extension in the term of contracts that we are experiencing? Because our deal win momentum on the larger deals has been improving at the margin, but on the revenue growth front, I understand there are offsetting factors in traditional license probably, but is there any change in the tenure of contracts? Yeah, those two questions to begin with.
There are two kind of a deal. The deals are based on license plus AMC, which we offer term license. So earlier we were using perpetual licenses. Now we started offering only term license of 5 years, 7 years term license, so that there is a increment revenue after 7 years can be accrued to the company. So that's the one policy change we have made in the company policy of giving a term license as a perpetual license, which has a upswing after 7 years. It will not be visible now, but it will give us a future protection to our revenues. Second stream is a platform-based revenue, which has got two kind of a pricing strategy. We call it B1 is my license revenue. We call it B2 is my subscription-based revenue, where I give the platform to the customer and charging him $50,000 per month to $200,000 per month is a variation of the platform when I offer to the customer, which means between $600,000 to $2.4 million is a kind of a number with variation which is there. And this is on a subscription basis as long he uses. So for that, we need to make very high upfront investment of POC and proof of concept to the customer to sell it. Once you sell it at $2.4 million for 10 years, that deal becomes $24 million. And that after third year, our margin on those deals goes up to 70% on third year time. But first 2 years, our margins may be as low as 20% for those deals. So that's a second construct. These are two constructs which is there.
So the SaaS contracts, is there a contractual duration for these? And is there, beyond which point we renegotiate terms?
Initially, typically SaaS contracts are 3 to 5 years, but normally SaaS contracts are lifelong. They're difficult to move out in banking system.
Actually, a core infrastructure, not discretionary to switch on, switch off.
Sure. My question is mainly on, just trying to correlate the traction in deal wins with the revenue recognition based on, the tenure of the contract. So basically, what we are saying is, in fact, the tenure has shortened because of the policy change. Is that correct?
No, Sugandhi, it was perpetual. Now it's 5 to 7 years. So the company actually makes more money. That's the first one. The second side we are seeing is the funnel is growing, which means there is demand. It's just the frequency of closure, the win rates, those are a bit of challenge. But there is demand. It's getting business case approved, which is taking time at times.
Sure. And sir, would it be possible to give an idea of the AMC revenue? How much of it is on account of legacy and how much would be from platform?
AMC doesn't go to platform. AMC is only for the not legacy license based.
It's only for the non-platform revenues. Yes. Okay. Sure. Thank you. I'll just hop back in the room.
Thanks, Sugandhi. Next, we have Mr. Harshal Chetia from AUM Advisors. Harshal, please ask your question. Harshal, you're there?
Am I audible?
Yeah.
Sir, first question which I had was on slide 15 of our presentation, where you mentioned that our current funnel is approx 70,000 crores. So how do we calculate that?
Right, 7,000. Funnel is 855 million is the funnel. That's what we are looking at it. Yeah. $855 is not 70,000 crore. It's 7,000 crore. Something wrong here in 7,000 crore. It's a $855 million funnel. Just look at it, maybe something else. Because it was mentioned in millions and that's a crore number is mentioned. So this is 20,000 million. So they put a crore there. So sorry for the accounting error. 7,000 crores. Sorry, 70,000 million is the number. So when we are moving between million and crores, these kind of errors are happening. So the explanation is 7,000 crores is the funnel size, what we have as of now, which are what, when we qualify the deal, where we know client has needing a solution, there is a criteria called BANT criteria. The client has a budget, client has the authority, client has a need, and client has a timeline. Once the fourth parameter gets established, that funnel we bring into $855 million funnel. That's a system which we have. Then there's a lead pipeline which we don't report here. The lead pipeline could be similar size, which is where the budget or timelines of the customer is not defined. That is the other set of funnel which we work on.
Okay, but is this the 7,000 crores or 70,000 million, is this contracts in our hand executable, or do we have to bid for it and then the client will select out of the top three or whatever it is, or how will?
We are saying these are the pipeline. This is not contracted. Contracted.
These are bids out there. Every prospect either given bid or going to be giving bid.
Okay. And how much is generally the conversion ratio for us?
The conversion ratio varies. We look at it conversion ratio on destiny deals. In the next slide, 57 deals are there. We look at it, the 68 deals in this time. It was 57 deals last year, same period. Out of 68 deals, look at it, 6 deals we closed this quarter. Every time 10% every quarter, 10 to 15% is the closure rate.
Okay. So secondly, where one of the previous participant asked about the 20% that we are building a 20% growth rate company, and you said, and the LTM number for us is 21%, out of which I guess 10% is due to the forex exchange rate. Do we also take a call on forex rate to justify growth?
We do take some call. We have a hedge loss of 9 crore this quarter. We do take a 3-year hedge call, which was around, we take 60% of the forward on a hedge call, and 40% we leave it open.
Sir, actually, my question was not on the hedging end of our business or how do we hedge our revenue. My question is that when we say a 20% growth company, so shouldn't us being a product and dollar-wise company, shouldn't we take it on CC basis?
We are taking constant currency basis. So constant currency is 72 million, but since we are comparing all the earnings, everything on crores, we want to just simplify our communication on Indian one currency, otherwise multi-currency confuses the systems.
Okay.
Because several currencies are there, you keep on moving from one currency. So we are a large exposure in GBP and Euro currencies. which has got a large fluctuation from 1.24 to 1.03 GBP has fluctuated. So it's a huge reporting issues.
So when we say that it is a 20% growth company or that the company that you are building, should we take it in terms of constant currency only going ahead that we'll be like on a longer term period we'll be able to deliver 20% on constant currency basis?
That's right. That's right.
Okay.
Thank you, Harshil. Next, we have Mr. Rahul Jain from Dolat Capital. Rahul, please ask your question. Rahul, you're there?
Hello, am I audible?
Yeah, Rahul, please go ahead.
Hello.
Yeah, Rahul, please go ahead.
Yeah, sorry for that. Firstly, my question is related to your profitability. As you see your pipeline right now, and you already have, a fair bit of hang in terms of where the mindset moving in terms of SaaS versus license kind of a deal. So isn't it optimum time to understand a gradual shift toward the SaaS model and the eventual impact of that on the profitability to arrive at the potential profitability of the business? Because initially, I think the growth-led operating leverage was a obvious factor. Now, since growth may be slightly slower than what we were thinking earlier, given the macro and also because of the mix of the SaaS, both could come as an headwind. So, is there an realignment that we need to do to our margin band?
Yeah, that's a good point, Rahul. We have to work it out, what is the impact. Still, the jury is not clear because we are getting a client which is asking for license revenue in Europe and Americas as well as license revenue in Asia Pacific. So this is still a jury is not fully out. We have just 50-50 kind of a jury where few customers are in capex space and few customers are opex space customers. So it's difficult as an immediately, but your suggestion is good that we should be working out how the impact of SaaS model versus license model.
Right. And any, of course, I know you don't know which deal within the pipeline you will end up winning, and the mix could be, eventual mix could be very different. But any range you would like to give for next year and the potential swing in the SaaS revenue that can happen versus this year?
We can only say that Magic Submission has a very good pipeline which can grow to 50% plus year on year. So that is the one thing if you know that SaaS deal of Magic Submission can grow 50% in US market. The rest of it, I will not able to give at a gross level.
Right. And just one more question, if I may. Regarding the growth, of course, a lot of people have asked in different way, but the way this year started and what we were expecting out of this year in terms of a growth and the way it has shaped up, and also based on the uh, minimal input that you have at this point from your client conversation, is it fair to assume that next year at this point also looks like at best be at the current pace, or you think there are some reason to think positive, more positive than what this year was?
We are more positive with the MAC compliant software and AI solution. So we are differentiating on two things called architecture and intelligence. We are the company which is architecture based and intelligence based. These are two keywords through which we are helping the banks to grow faster. The exact number in the next quarterly call, looking at the first 3 months of the new financial year, the new calendar year, financial year for a lot of clients, we'll able to be better. We can guess it better at that time.
Sure, sure. Just one last bit. on the if you are aware about this development in Temenos where the CEO and executive chairman are about to leave the organization and the new leader it as any opportunity for us, or you think these are part and parcel of the business and there's not major advantage or disadvantage because of that?
Yeah, these are the part of the business. Yeah, people sell, buy, company, merge. Yeah, it's okay. This is like that only.
Sure,
Don't pay
sure.
too much of a heat into this. Need to be good in ourselves, create value for our customers. All these things will happen.
Great, great. That's it from my side. Thank you so much.
Thanks a lot, Rahul. Next, we have Mr. Anil Sareen from Centrum Broking. Anil, please ask your question.
Yeah. Hi, am I audible?
Yeah.
Yeah, Anil, please go.
Great. So I think first off, it's been a good kind of a recovery in this quarter, coming off the base of the previous quarter. So congratulations on that. My first question is on the banking as a service. I think there was an initiative along with a large tech company to go in the US. Is there any update you would like to provide?
Sorry, banking as a service for the past. Maybe
Yeah. No, that's the demand in US. That's where we're working along with the cloud providers. It's still on our one of the growth journeys right now, and that's where the US is saying between this banking as a service as well as Magic Submission, we feel positive in the coming year.
Okay.
The banking is a platform which I call virtual account. They are like a banking as embedded finance.
Okay. No, thank you. On Magic Submission, I mean, there is a fair amount of enthusiasm. First off, it's a platform. It's a SaaS solution or it's a license software?
It's a SaaS solution. It operates completely on AWS, and the offering to the clients is an AWS fully hosted Magic Submission, which includes ingestion of documents straight from emails through to fulfillment as into the underwriting platforms. Some of them will use our underwriting platforms, some use other underwriting platforms. The ability to enrich the quality of data and do the whole AI capturing of information from documents for helping people in various commercial line businesses of insurance process faster and more accurately is the heart of the suite. It is fully a SaaS-based solution. It's subscription-based solution, and it's normally charged at a minimum subscription level depending on the number of submissions the client wants to start.
Got it. And is it like, we have GTB, we have GCB. So one license sale of Magic Submission, how would it relate to one license one kind of a subscription-based sale of a GTB or a GCB? Like how big is this product?
Yeah, so initially when we launched this Magic Submission last year, we were looking the deal value per client could be close to $500,000. Now we are getting a client with Magic Submission. It can go up to $3 million ARR, not even deal value. So we have a deals in the pipeline, which is the ARR of $3 million submissions. Single deal, single client.
Single deal.
In the US for insurance is 200 million submissions a year, just to give you a picture of the size of the market.
We are pricing per.
Okay. So that's very helpful. Again, still going on with US, I mean, an earlier participant had also asked this, but I just wanted a little bit more clarity. Is that generally when we speak of Intellect, there is a feeling that, very strong in Asia Pac and Africa, getting, quite strong in Europe, but US is a WIP. And on the other hand, now we have this Magic Submission. So how would you sort of, at an overall level, describe your progress, recent progress in the US?
It's a part of the strategy, Anil. We communicated from 2017 the strategy that we will strengthen Europe. And then we enter into the US. The US we started focusing only 2 years back. So we are getting a very good traction once we are able to master the technology in Europe. So our it is part of 2015 strategy. Nothing changed.
I think good is US business is being built as platform subscription business, so it's not eating into any of our
License, yeah.
licensed business. These are new products and new markets being grown, so it augments our baseline.
So again, on the core banking process that is going on, which can be a lengthy process, as explained. Uh, Earlier, you were mentioning Mambu also within those top three. Now the name has been dropped. Is that? If you can just throw some light on that.
Mambu is losing out.
Okay.
Compared to
It's not coming in last week.
we crossed the hump of the Mambu. Rajesh can answer it now.
Yeah. So I think what we see, we have when we are competing at the kind of opportunities that we are seeing, and typically a bank would start with a long list and then go to a short list. And as I said, in most of the cases, especially in Europe and advanced markets, we are seeing Thought Machine and Temenos as our competitors. We do see very in one or two opportunities in Mambu, but Mambu is more tuned. What we are finding is Mambu is more tuned for a startup digital bank with limited user journeys. So we are not really seeing them as a at least at this point of time, as a big competitor as we go and compete in some of these markets and some of the clients that we are competing with.
Okay. Okay. So first of all, I mean, congratulations on making it to that elite group. Especially since the kind of funding that has gone into one of your competitor and the size of the other competitor and the history of that other competitor, for you to move into the top three is something for all of us to be proud of. Uh, but given there was a reference that Arun made about valuation of Thought Machine also. So would you just attribute it to the frothy nature of the previous funding round, or is this an indication of what Thought Machine can actually achieve? And from that, I'm trying to draw some conclusions regarding Intellect also.
Yeah, we don't know the difference between the two, but this funding has happened very late in the last 2 3 months. So starting point was not there, and we are also making the business case. That business case of core banking is so large. The market size, like today, FIS, Pfizer, they run into a 5 billion, 7 billion kind of a market size, and that is what we are attacking. Obviously, it is difficult to attack America, FIS and Pfizer are so embedded into the system, and then Temenos is embedded in the system. Their local systems are there, but thousand bank market at $5 million each. If you take, it's a $5 billion market. That's a and every bank needs a core banking. While liquidity can be taken by top 300 banks, but core banking will be taken by all the 1,000 banks.
Got it.
5,000.
Last thing.
5,000 banks. Manish corrected me.
5,000 banks. So good. You've made an entry into the thing. So I just have two more questions, if I may sneak those in. One is, your SaaS now run rate, SaaS pro platform run rate is now crossing 100 crore. Now there is GEMS component in that, as you just explained, but that I can say that it's a 400 crore kind of a revenue run rate. So based on the momentum that you're seeing, based on especially Magic submissions will be a contributor to that. I mean, when does it start becoming 100 million per annum, such that you can absorb the POC cost? Like it's very strange in SaaS that firstly you take a revenue hit, second you take a margin hit because the business acquisition cost remains the same, but the revenue is a fraction. So to the naked eye, to an outsider, it appears like, oh my God, the business is suffering, whereas you feel the business is doing very well. So where is that inflection point where there is enough money coming in from SaaS, high margin revenue coming in, which pays for the POCs and all the beauty parade that you have to do?
We are now coming to $50 million, as I say, 400 crore, which is coming to 50 million, $50 to $100 million is a journey. Maybe it will take another 8 to 12 quarters to get into that journey of $100 million. And but I really appreciate Anil understanding the nature underlying dynamics. So you understand the business kinetics of not I think dynamics. I am using the word business kinetics of a SaaS business. SaaS business is having a kinetic. It is a kinetic energy which drives the growth of the business. So what are the POC cost has a double whammy on us that gets countered by the size of the. So when we have on Magic Mission, if you have 20 clients or 25 clients, then we will able to get into the 50% margin zone. As soon as it becomes 50 clients, we will be getting to the 70% margin zone.
Right. No, thank you for that. And my absolute last question is, you had started this journey of enrolling partners in Europe, and a few quarters ago you had mentioned. But the way I look at it, I mean, there are very powerful Indian system integrators. So why have you not gone with Indian system integrators, which can really lead to faster sales growth for you?
We are working with them as of now with Indian as well as we don't have a differentiation between Indian and foreign. But I think local relationships and client relationships are important. So our core value for the partner is client relationship and delivery capability, their competence in delivery. These are two factors which are looking at it. And we are not having saying Indian is different from an international, but Accenture or IBM has a deeper relationship in influencing a core systems or a strategic systems versus some of the service providers who have a deep relationship with CIOs. So we are looking for both of them.
And as a corollary, I mean, has there been any progress? I mean, you've got into relationship, you have committed people onto that relationship. Have they also committed senior leaders, and is there any traction?
Yeah, Microsoft has committed senior people. AWS has committed senior people into this relationship. We are doing the event in Bombay on 21st February, where the senior most person from AWS is flying down for that event.
Okay, and is there a pipeline building as a result of all that senior management attention onto that?
It takes time. I think I would say pipeline is building. There's a direct pipeline and there's a referenceable pipeline. So referenceable pipeline you start building in a phase 1, and then direct pipeline start building in a phase 2.
Okay, great. Congratulations once again. Thank you very much.
Thank you, Anil.
Just two more. Small demo for the one of the AI business. Just to, since you are there and you are looking at Indian market, we just want to give a preview of 5 minutes to the investors on one of the corporate governance, ESG corporate governance. We call this product under wraps right now. We named it. The internal name right now is the Sherlock, which is for corporate data investigation. Banesh will take over some 10 minutes time for you. Yeah. Deepak Gurijan on the phone. Deepak, are you there? Deepak, are you there?
Yes, sir. Yeah.
Yeah, just if you could present, the thing. So Sherlock, so what we've been doing with the ESG business clients that we're dealing with, and as probably mentioned to you earlier, one of them is the world's largest sovereign wealth fund. They basically use data to be able to access questions related to ES and G, which is all the 3 elements of environment, social, and governance. So we are going to sort of touch on one governance capability that we have also available. Deepak, who's the CTO for Intellect AI, is on the call. He's going to actually take us through a very quick way, so you will relate to this very easily. This was done obviously for investors, so it's people like you who will actually be able to relate to it, in an easy way. So, he's going to sign in and show it to you, and then if there are any thoughts or questions, feel free to if you don't have the time, send it over to us.
Any feedback also?
Yeah. So basically what it will do is it will take an ISIN number or a company name and it will give you a lot of specific information about governance of a company. Is right now typing in Tata Steel. And that's that's already something that we have access. So he'll give you an idea. Deepak, go ahead.
Sure.
So, okay, yeah, go ahead. Okay.
Yeah. So I think it's here looking for the company details, right? From a corporate due diligence perspective, every information that you require, it is as simple as doing a Google search, looking for the company. Here you can search either on the company name or as company unique identification number. So what I did was I just typed on Tata Steel Limited and I got a SIN number, and based on that I selected. This is typically when you search for that for the first time, it will take anywhere between 3 to 10 minutes, depending upon the size of data that is required to be acquired across. And we connect to the multiple data sources, largely both public free sources and other sources. And here what you can look for is the company information, and basically where the company, what is the DUN number of the company, tax identification number, where it's registered, and also the charges, basically what are the loans that company has on. So in this case, for Tata Steel has loans from the various bank, from Central Bank, Industrial Development Bank, Andhra Bank, and everything. And also the status of that particular loans, whether they're open, closed, and also you have a complete the book of loan information of that particular company. And also the like financial statement, probably whatever is the recent statement that they have, we have, and we also can do a historical statements also. And what is the ownership looks like, whether from a mutual funds, promoters, and everything. And also the subsidiaries of the companies. Again, they could be domestic or international, and then also the related companies, especially if there are any, and the related, it need not be direct, it could be from indirect also, where the directors of this particular companies are also directors in another company. So we'll be able to kind of triangulate and arrive at that particular information. And then finally moving on to who are the existing directors of this particular company. If you look into that, this generally, if you want to just take an information, for example, Kaushik Chatterjee, who is an existing director, we also can get a complete view of where else Mr. Kaushik Chatterjee is a director. Centennial Steel Company Limited, Tata Steel. So we can get into the complete view. This is just a more pictorial view, but we also can get into the details of where else Mr. Kaushik Chatterjee is director at present, and also in the past, when the directorship has started and ended also, we can get a complete download of that particular information. And what also is possible here is, in this case, not only the present directors of this particular company, and also the past directors of this particular company and their nationality and all other particular details also we can get. And then what is the another important information is, we'll be continuously doing a social listening about this particular company, and whether there is any governance related thing that need to be flagged out, and it could be positive or it could be negative. And this is where we use our sentiment analysis to understand if there is, again, that is specifically on the governance thing, anything that probably requires an attention. So that also we can do. So this gives a complete end-to-end aggregated information of the company and the financials and their subsidiaries, the directors, and their current relationships with the directors of various other company, and also the news about these companies.
So this is a picture you get across all of these dimensions in a single place, because we've already actually accessed and put together data both from various data sources as well as documents, etc., to pull this. And this is done on the fly, just like a Google search.
Paytm, just take Paytm, new language.
Okay, Paytm. Yeah.
They will not have too many subsidiaries, or they may not have too many.
Right. So again, a similar information of Paytm. Paytm, I took a subsidiary already, so but it could figure out the related companies of the Paytm, like 197 and everything. Paytm Payment Bank is the one that I took. While it didn't have the subsidiaries, but again here, similarly for Paytm, who are all the directors, who are the existing directors? For example, Mr. Madhur Rior, again, He's actually director in many other companies and also we can see all the company details of that particular director. And again, similarly, where exactly he is already a director and all. At this moment, he's director, present directorship in 197 and the parent company and many other companies. And again, past directorship is also with various other companies. So this is an example of Mr. Madhur Dior. Again, similarly looking into the social listening feed, right? While probably nothing happened recently, but again picked up in the past year, if any other incident happened on this particular this thing. So we can, for example, in last year March, RB has taken action on against the Paytm Payments Bank under Section 35A, and also it kind of anything that comes into the governance related thing, either positive or negative. Again, our AI models will pick up and give the alerts to the end user.
Yeah. So this is just an example. Of course, obviously we'll keep building on capabilities as we go, but this is a very, very comprehensive way for anybody who wants to govern a particular status of a company or something else. And obviously, we know there's a lot of noise around governance building up quite aggressively across the world. So this is just one way we can take Sherlock as a platform and help various people either govern companies, whether they are banks or asset managers or even investors and so on and so forth, or even regulators and or auditors and so on. So I think it's a very, very broad-based capability. Thanks, Deepak.
Thank you, Deepak. So idea was just to show a small preview of it. This can be enhanced with the ESG compliance. We can have a ESG score tomorrow, but to be converted into the credit score of the company. These capabilities are already there, which is the intelligence components. Any comments anybody has? Or we can move to the final question.
There are a couple of more questions. Can we go ahead?
Just 5 more minutes, maybe. Right.
5 more minutes. Yeah. Next, we have Mr. Vivek Kumar from Best Pause. Vivek, you're there? Please ask the question. Vivek? Please unmute yourself and ask the question. Please unmute yourself.
Are you able to hear me now?
Yeah. Yes, Vivek. Please go ahead.
Arunji, I'm just asking from your commentary. Your last con call, you mentioned that the 3 wide areas like banking as a service, this GCB, where we are becoming one of the top 3 players, and then Intellect AI. You asked us to look at these 3 as the new growth areas. You have been giving extremely good commentary qualitatively. So my questions are, like you have mentioned in this result press release, that there are almost 10 deals that you are very confident of signing up in the next 6 months in Intellect AI. So how much of your other participants have asked about that you being the top 3, and also how confident are you that this will turn into quantitative? I'm not saying immediate quarters, but how confident are you about your qualitative commentary turning into this quantitative in the coming 1-2 years?
Yes, you have to judge, yeah. I have to just tell you that when I show the symptoms where we are talking about, we are showing in a deck 2 places the IT has given us a leadership quadrant. To get into that corner quadrant of payment among 20 companies of payment and 2 leadership quadrant, I think you need to judge based on that. These analysts are not recognizing us just based on some money we paid to them. If you look at payment space, how many companies are there in payment space, which is there in the last slide number 29 of the deck? They are all the respected companies, including IBM, which is there on the extreme end of the quadrant, outside circle. They are not inside circle. There are only 2 companies they are putting in inside circle, which is Intellect and Finastra. And in other liquidity management, it's only 1 company in that inside circle. Now, if you don't make a judgment on this, then it's your call, yeah. As an investor.
No, I'm just asking. So the second question I'm following on this last sentence that you asked, Intellect Payments has been implemented as India's largest private bank with cross-country corporate payment coverage of 60% and expected to scale to 100% of transaction. Can you just Because I really couldn't understand what do you mean by 60% of the country or corporate payments in the country, or I'm not asking the name of the bank, but can you explain this? Sorry.
Yeah, go ahead, Mani. The largest bank, yeah, CBX.
Okay. Now, this is the 60% of their payments have moved on to this platform, and it's going to grow. It's migrating from the other platform, and it's going to grow by 100%. That's just to talk about the scale, but it's also at a country level. Our game plan in India is to reach to that level, basis what we have signed or what's in pipeline. So that much amount of corporate payments will flow in our network in the next 12 to 18 months.
So corporate payments of the country is what you're saying, based on whatever.
That is our goal. This is for this specific bank.
Oh, okay, okay. Thank you very much. Thanks, Arunji.
Thank you.
Thank you. Next, we have Mr. Nishit Shah. Nishit bhai, please ask your question. Nishit bhai, are you there?
Hi, can you, am I audible? Congratulations on a good set of numbers, Arun, and your team. And also special congratulations for the third bank deal win. Now, with this, how many banks in US we have on the platform? And how many we have in the pipeline?
With this, we have now in North America 10 banks on our platform, and then we have enough number on the insurance side. Maybe another 15 odd are on the insurance side, 10 are in banking side. So we would be close to 25 customers in North America.
So would we say that we will be at an inflection point in terms of penetrating the banking customers in US with these number of reference sites?
Not really inflection point. I'll say inflection point. I think we are building the pipeline.
Becoming referenceable right now.
It will take another 18 months for you to get an inflection point. We believe that 18 months we can be more closer to inflection point.
I think, Nishit, our previous references were a lot of global banks. Now we're getting US domestic banks as reference. That's the journey, like Arun said, 18 months more. There's some in implementation, we win more. That's when we will get to become a local domestic player.
Understand. And how is our partnership with Microsoft and Accenture and AWS progressing? That's not just confined to US, I understand. It's global, right?
All three are global.
All three we are working with all three of them. We are working in multiple deals with each one of them. So with IBM we are working in one of the large central banking deal. In Accenture we are working in others few deals with Accenture. We are working with Azure. The management commitment is there. AWS. So all the four of them we are working right now. So they are all playing positive for us because they cross-reference us in various deals. So sometimes we are directly working with them, and sometimes we work as a cross-referenceability in the market.
That's great. And on the GCB side, we had a lot of deals in the pipeline, especially in Europe, where we were in the top two company. Are we closer to the kind of a fructification there, or are we still away on that?
In Europe is slowing down. Decision cycle is slow, so that's the only issue there in Europe.
But I think you've seen we have announced a very large European bank, upwards of $3 trillion, where we have closed a deal in this quarter.
French bank, yeah.
French bank.
But core banking, core banking, we are still
core banking evaluation cycles are much longer.
Much longer.
Right. Thanks a lot. And
Okay,
all the
thank
best.
you.
Thank you.
Praveen?
Thank you, Nishit bhai. We can have one more question.
Just one more.
Yeah, Vibhu Gupta from GSS. Vibhu? Vibhu Gupta? Vibhu, you are there? Yeah. Yeah. Please go on.
Hi, sir. It's a very good quarter this time. Sir, are you planning for buyback?
नहीं, अभी ये बोर्ड का डिसीजन होता है यार, मुझसे इसमें इन्वेस्टर को नहीं पूछना चाहिए।
No, the stock price has fallen from 950 to 450. It's a good time to buy back.
So if you're suggesting something, I'll put to the board here.
Okay, thank you.
Thank you. Thank you very much. I think thank you for advising us on some of the strategies. It's good dialogue with you. So I would call this investor conversation as a investor dialogue in coming months, because this time we had more time for conversation than presentation. Since you know the company well, you track the company well, so no point in wasting half an hour time, critical time. Give us a feedback on Sherlock, whether this market will be looking at it. You write a mail to Parveen and he can. And anybody wants to have a more detailed understanding of AI, we will do some session, separate session on a technology session.
If you see any of your customers meeting that,
yeah.
Thank you very much.
Thank you.
Thank you.
Thank you, everybody. Now we are closing the call. Thank you. You may log off.
मेन जो वर्चुअल अकाउंट मेरा जनरेट हुआ है, सपोज मैंने एक्सेस सेलेक्ट करके उसका जनरेट किया, वो अकाउंट जब मैं नेट बैंकिंग में डालता हूँ तो उसमें आते नहीं है कुछ भी, वो तो इंटरनेट अकाउंट में बता रहा है। हाँ, जो वर्चुअल जनरेट